Hello, Jim here. I've been on a journey to learn the right way to trade options, and I've been trying a lot of different strategies. One of the strategies that's worked out pretty well so far is what I'm calling the monthly cash secured put wheel strategy. It's been bringing in quite a bit of income. I did a video a while back, around probably a month ago, maybe 5 weeks ago, about how you could make 1,500 running this wheel strategy on a monthly basis with only 25,000. Well, I'm going to talk more in detail about that. I'm also going to share with you all those positions were set to expire on Friday. Two I closed, two expired, and then one did get assigned to me. So I'm going to talk about those particular trades. And I'm also going to share with you a few new companies that I'm looking at to potentially run this strategy on. You may wonder why. Why do I need a couple of new companies? Well, two of the companies, Twillo and Square, shot through the roof over the last couple of weeks. So I really need some companies that are priced right in order to run the wheel strategy. So I found a few others. I'm going to talk about why I like them, how their fundamentals look, the fact that they have pretty good premium, and they're good companies growing over time. I'm going to share with you details about them. And then I'm also going to share with you the trades and what my expectations are going forward with this, what I'm calling the cash secure put monthly trade or strategy. So stay tuned. I think it's going to be well worth your while. Okay, let's go ahead and jump right in. Here's the spreadsheet I set up for that previous video. I did move things around a little bit and added a couple more columns, but let's just start from the beginning. So this part, or this type of strategy, again, was running monthly cash secured puts on companies that I like that are growing. But the idea being that I run the wheel, meaning I let things get assigned, and then once they're assigned to me, I look at writing cash secured puts again and having them assigned away from me, just to see overall if I could potentially do better. So I opened up most of these trades about a month ago, a little bit more than a month ago. So I opened up a cash secured put on Chewy that was at 27.50. All of these expired on 11.15. It expired. Also did Square at that time. I think it was in the low 70s. It's moved up to the mid to high 80s. And it also expired. And then Twillo shot way up. It might be over 100 currently, but again, I had two of these, and I brought in a lot of premium last month from these, but they both expired. In some ways, I wish I had bought them because I would have had a huge return with Twillo. I do own some Twillo, but it would have been nice to own a little bit more and had those shares shoot through the roof. Of course, I'm trying to run the wheel, so again, my goal isn't necessarily to keep these, but just to see how much premium. But going forward, I'm not thinking I can easily write a cash secured put on Square or Twillo. I just believe they're a little bit too pricey right now. They're still great companies, but price does matter, and they're currently a little bit on the high end. Now, Pins, which is Pinterest, was assigned to me. It actually dropped. They missed earnings, and it dropped pretty significantly. So I own 100 shares. Again, it's only one contract, and I earned 225 or 204 in put premium. So my cost basis is a little bit less than 31. Now, currently, we can look at them real quick, and then we'll look at the new companies. So you can see here, if I go back to the previous month, they had earnings right around the 7th, and you guys are probably seeing the same thing I am. Companies get clobbered if they miss earnings, and then the reverse is true. Or if they can do well in earnings, but guidance, they can say a few things in guidance, and again they can get hammered. I don't remember the market moving as much as it does or has been recently, so you have to be really, really careful around earnings. So it might have been a little bit of a mistake, but not really, again, with my goal being to let these get assigned and then, sell a covered call. But the issue is it's dropped so much now, and my cost basis is 31. So it's literally almost $3. Yeah, $3 below my cost basis. So there's just not a whole lot of premium. If I look at the premium, it's like $10, $15. So I don't really want to own a covered call. So you might think, well, this is a failed trade. This was a bad choice. But just like you saw it drop like this, if you look at it for a year, it dropped big time, then it recovered, it dropped and it recovered. You could say here it's going to, lower lows, but you could say from here it's been going to higher highs. It did hit a bigger low here. So there's a good chance it could rebound pretty rapidly. When you look at their numbers, they still, even though they just missed gap earnings, I'm not sure about their guidance. I think they might have lowered the guidance a little bit, which is probably more why they got hit pretty hard. The revenue surprise was good. And you can see overall they should be growing consistently earnings over the next year. Their growth looks good. It's still fairly good growth, growth in income, growth in revenue. So overall, very good growth. Profitability is good, but not great. They do have nice margins. They are bringing in a lot of cash flow from operations. And they have quite a bit of income per employee. So they don't need many employees to bring in some pretty good income, which is good. And then if you looked at their financials and you come down and you look at the balance sheet, you can get a feel for their debt. So if we look at long-term debt, and it's typically right here above capital leases. So they do not have any long-term debt, which is always a plus for any of these companies. So are they going to continue to go down? They very well might. It looks like after hours trading, they're up a bit, but I could see them coming back up into the low 30s just as easily. So this is where patience is key. I might not be able to make a trade Monday or Tuesday. I'm probably going to have to wait for an up day to make that trade. But overall, they're still a good company, and I think long-term they're going to do well. Now, if we go back to the spreadsheet, and that's what I'm talking about, Pinterest, it was assigned to me. So all but Pinterest are trades that have been complete now. So I have to either do brand new trades with them or go with a different company. So what I'm looking at doing is sticking with Chewy. It looks like I probably will do another trade with Chewy. It did go up some. It did the opposite. It went up a bit. But I do think I can probably open up another cash secured put that expires. All these will expire in December 20th. So I'm thinking I'll probably do Chewy. Now the new ones are Bluebird, and it has fairly good premium. Let's jump in and look at Bluebird. So these are the new ones. This is Bluebird Corporation. I've had my eye on them for quite a while. They got pretty high up there at one time into the 50s, but their numbers look really good. And if you're not familiar with them, well, just think about your yellow school buses. They make those school buses. So, and I don't believe they have much competition. So their PE is currently a little bit less than 11. They've come down recently, so they're kind of in the middle. They're nowhere near their high. They're nowhere near their low. What's nice is they pay a dividend. Actually, they don't pay a dividend. They have good growth, significant growth. I mean, income growth is significant. Revenue growth, it's pretty good. This is crazy. I don't think I've ever seen a number quite like that before. But A+ for growth, profitability, they're fairly profitable. You don't see return on common equity that high, 134%, and then return on assets, 21. And they trade in a pretty small range. If I go back to 5 years, they have popped up, but they did start making money, and then they had some good earnings. But they've come down, and I feel like they're a pretty good buy right now, especially if you can pick them up around 35. So I'm looking at doing a cash secured put on them. I'm actually thinking about doing 3 of them. So instead of 1, because they're only $35, I'm thinking I'll do 3. And it would literally bring me in $735 in put premium at a 38 delta, which is relatively, yes, that's a high delta, but $35. They were near 55 literally a month ago. And then the call premium is even better, can potentially bring in 1,050. You know, pretty substantial. Chewy, I did not talk about the premium, but the put premium looked very similar to when I sold Chewy the first time. Actually, a little higher, around 184. So if I do another trade, it looks like I could pick up 184. That's at a $30 strike out, expiring 2020 or 2020-24 with a $30 strike. We would bring in that much premium. Finally, the next one is NTAP. That's NetApp. This is a lot of the software companies that I've brought up before have shot through the roof. I had a lot of naysayers, even with Zoom. I remember Zoom kept hitting lower lows, and people were like, "Oh, why are you trading in Zoom?" But Zoom has also shot through the roof. I think it's in the low 80s currently. But this is one I think that people have missed the boat on. Their currently earnings per share is $7.19. Their PE is 16. Now they do pay a dividend. They have a dividend yield of almost 1.77%. Let's look at their payout. Their payout is relatively low, which is good. 5-year growth rate, 3%. Not much, but they've only been paying dividends for a year. So relatively recently have they started paying dividends. Growth, not the best growth, but not bad either. They've got some growth for income, a little bit of growth for revenue. They're a fairly bigger company. Profitability, almost like the last company we looked at, they have return on common equity of 120%. I think one of the companies that's, Apple is one of the best, and I think theirs is around 150. So very good return on common equity. Return on assets, 11.65%. Let's just look at earnings. They had earnings on 8/28, so they do have earnings coming up on 11/21. So I might make this trade late in the week after earnings is what I'm thinking. But the last earnings they beat by a good amount, and you can look year over year earnings looks pretty good. They do have that's what is that? 2025 Q3 2025 might be a little bit lower. But again, they typically beat earnings. That won't necessarily mean they do it again. So I definitely would probably hold off till after 11/21. And then again, let's look at financials. Let's see what their long-term debt looks like. And here's long-term liability. So 1.244, and they have common equity of almost, 929. So they do have a little bit more debt than I typically like to see. So that's almost a 1-for-1, or a little bit more like a 1.2. So the debt is a little bit high. I do like to look at the income statement at times, but you can see it's steadily going up. But they're bringing in almost $6.5 billion a year. So overall, a good company now, and their pricing, like I said, isn't through the roof. So what I was looking at doing with them is I got another cash secured put. I was tempted to potentially do that's the wrong one, 110. So I am taking a little less risk. I'm doing a 28 delta. So around 110, if we come back over here. So they haven't been back to 110 since May of this past year. And at 110, you would have pretty close to a 15 delta. But they bring in a lot of premium. So a 28, the strike price is 110, would bring in literally 288 in put premium. But then the call premium is even better. So, and right now it's, I could do this as a vertical put credit spread. I will check to see the $10 out, or the farthest out would be $10, but I will look at the long puts just to see how pricey they are, just in case, we have a market correction or a black swan event. And then finally, the last one is Fiverr. They're at $27. I currently have a vertical put credit spread on them. that I believe is expiring 12/20, but this would be another trade. This would only be one, so one cash secured put. It brings in 105, which isn't bad considering it's a $27 stock. I like Fiverr. I use Fiverr a lot. I use them for all my graphics. I'll also use them for logos, and I've actually hired developers through Fiverr. I used to use Upwork, but I find Fiverr I can find people, and they're in some ways easier to work with. Like they found a way to encompass their, what they're offering, and it's a little bit easier to deal with than trying to negotiate with someone on Upwork. But 105 in premium, and let's look at Fiverr real quick. So they're not crazy overpriced. Earnings per share 238, 1174 is the PE. They don't pay a dividend. Let's look at growth. They have fairly good growth, very good income growth. What you find is a lot of these companies who had major growth at one time, they start maturing, and they end up becoming more profitable. They figure out better ways to do things. They may outsource or hire different people, but it potentially they can start doing better. And then profitability, it's good but not great. Their margin isn't, and their main margin, gross profit margin, is good, but their profits aren't the best. So they're spending some good money. Their return on common equity is 3. Return on assets is just barely positive, and my guess is that'll improve. That, like I said, they've only recently become, or not recent, last year or two, they've become profitable. Let's look at debt. And we'll come down here to long-term current liabilities, long-term liabilities, long-term debts of 457, and then common equity 324. So they have a little bit more debt, but considering they have negative retained earnings, their common stock is 701. So they probably made a purchase. So it's almost like you should use the 701, which would put it about where I'd want to see it. They're a little bit pricey. I'd rather this be closer to 350, but something to keep an eye on. Let's see if they've been reducing it to a little bit. Actually, 52, 55, 57, they've been increasing it, not reducing it. So they are relying on debt somewhat. And then probably a lot of that maybe they have gotten into AI, so it could also be some costs related to artificial intelligence. I know they have some pretty interesting tools on there now to help you find someone that can help you with a project. So good company, not way overpriced. Let's come back over here. So with them, a cash secured put 27. They're currently at 2804. It's a 35 delta, brings in 105. Its call premium's a little better. And like last time, all of these are fairly profitable. Right now, I don't have the covered call one since I haven't been able to look at that, mainly because the pins has dropped so much. There aren't many that I would pick, so I'm hoping if pins climbs again, I'll be able to show an ROI. But the ROIs are very comparable to what I had before. Some are a little bit higher. This 83%, which is BLBD, which is the Bluebirds company that makes the school buses. So my goal is, and if I did these trades, this is updated for this month, so I'd bring in 1186, again, interest of 96, it'd be 1282. Now, if any of the calls went through, meaning they were assigned to me and I could run a call, depending on what happens to the stock, this would be a little bit higher, but this is still 1282. It'd be like 15,000 you'd bring in on a yearly basis. And then total capital would be a little bit more. That's 28. So that's all these. And actually, these are shares I own, so it would be more like 26. So it's a bit more. I could pick and choose different companies depending on what I wanted to do. So let's just run through the notes. But if I did something like this, it would be almost like a 62% return. And again, being successful the first month, you'd have more like 26 or 27,000. So you might not be able to do one of these trades if you wanted to stay within 25,000. So let's jump into the notes. The only position assigned to me was pins. It does not have very good premiums, dropped 15% in 1 month. So we talked about that. This is using nearest to the money for both puts and calls to stay above the cost basis. So for the idea with the calls is, again, to do it above the cost basis because you want to make a pretty good return in a short period of time. If you put it too close to your cost basis, you might end up hardly making anything. Not all would be assigned, so can do the 5 contracts. Once assigned, run call and then repeat. And again, my call for pins did not get assigned until Friday, so it went through expiration and got assigned to me. It was not an early assignment. Look at different stocks. Due to the high price of Twilio and SQL, I do not think both might be, or I do think both are probably overpriced. It shows things change and you cannot necessarily rinse and repeat. So running the wheel isn't as easy as a lot of people lead you to believe. It can be difficult doing it with the same companies month in and month out. Now, maybe you can do it with an ETF or an index a little bit easier. If you've had more success running the wheel with an index or an ETF, let me know. Please put a comment in the notes. And this is a small strategy and an overall plan. So I'm sticking to my bread and butter, which is going further out and doing a 15 delta. My favorite trade is about a 60-day trade, 40 to 60 days. I do it around a 15 delta. And it usually puts me in a spot where, the stock is almost 10% cheaper than what it is today. So and especially when I'm looking to pick that company up, that it makes it a much better price. And again, I'm looking at a price that's pretty majorly discounted compared to what the price is currently. Now, some of my other considerations were TNA, OXY. That's Occidental Petroleum. That's what Warren Buffett is invested in. And eBay, I've had some success with eBay. I thought about possibly doing it with eBay. Let me know, what are y'all's thoughts? Do you have another company you would look at doing this with? Do you run the wheel? If you have a suggestion or a company I should look at or an ETF I should look at, please leave a comment. With that being said, I do want to mention, if you want to learn more about my memberships, details will be in the descriptions. Plus, if you want to look at Seeking Alpha, I use it all the time. I also use Barcharts. I use them both. Links will be there. I do get a kickback if you sign up, and I think you have to stay a certain period of time. I found them both very helpful, and I pay for them both too. So even though I'm an affiliate, I also pay for both services. And I actually have been paying for those services for a while before I ever got into being, having my own affiliates. So that's what I wanted to share with you guys. Let me know what you think. Again, I try to respond to most of my comments within 24 to 48 hours. And as always, thanks for taking the time to watch this. And I hope to see you next time.